Matt, this has been a very volatile week overall. I wonder if there's been anything that you've seen develop over the course of the last couple of weeks that makes you feel confident either that the market could be set up for a bounce continuing into the next week, or whether or not this is just a head fake and that we're due for more declines in the weeks ahead.
Hi, Dom. I'm worried about what we face going forward here. I mean, the thing is, the situation is, the stock market is basically sitting at the same level it was 2 months ago, this time in January, and yet basically all of the headwinds that we were facing back then are worse. We have higher oil prices, higher interest rates, higher inflation, which they all come together. We have supply chain issues are worse than they were before. GDP growth estimates have come down, et cetera. And the stock market was expensive back then. It's still expensive. We're about 20 times earnings. It just makes it tough for the stock market to really rally a lot more, from here. I mean, we do have the end of the quarter coming up, so maybe the market can hold up, a little bit longer. But I do think we're going to face some more headwinds as we move into the month of April.
How important is the interest rate narrative to what you're seeing right now? There was a time, maybe just several months ago, 5-6 months ago, when we talked about interest rates being the real headwind for trade, especially in technology stocks. It doesn't seem to be that way right now. Is there a disconnect? Do you still worry that the interest rate trajectory is going to be more aggressive to the upside than maybe some people think?
Yeah, definitely. I mean, the Fed came out. I mean, he confirmed. He started the Fed chairman a couple of weeks ago, 2 weeks ago, talking about how they were going to, continue to be more aggressive. Remember, he said in his testimony to Congress that he really loved Chairman Volcker and what he did, and he basically said we're going to do whatever it takes to tame inflation. And then he said it again last week, and then reiterated it again this week. They're going to go 50 basis points in May, and most people now are saying they'll probably go that way in January. And the bond market is obviously rates have moved up. They're singing a much different story than the stock market is right now. And we all know from, if passes any prologue, the bond market is usually one that's right. And therefore, those higher interest rates, I think, at some point before long, are going to come back and hurt the market and cause some of these tech stocks to pull back again.
So technology's been a huge focus for obvious reasons, because they have been volatile and they have been maybe the place that investors have gone to in times of kind of dip environments like we're seeing right now. I wonder about the energy trade. We just heard Kayla Tauscher report about this idea that we might be kind of at least moving towards solidifying more relationships, especially on the natural gas front with our partners over in Europe. Is that energy trade still attractive to you right now, even after the run it's seen since the pandemic lows back in 2020?
Yeah, I think the thing is, I turned bullish on the group back in October of 2020. I think it's got further to go. I mean, 2 weeks ago, I saw that the energy stocks were, and especially crude oil, had gotten ridiculously overbought, but only on a short-term basis. And sure enough, it came from 130 back down below 100. But now it's stabilizing again above, about $110 now. And this thing going on with Russia is not going to end anytime soon. I mean, the whole this talk about ceasefire, that seems to have been pushed to the side. Putin's not. I hate to say it, but I don't think Putin's going anywhere. We're looking at many, many months of this. That means the sanctions are going to stay on for a long time. And as great as Europe is making these moves to be less dependent on Russia, this is not something they can do very quickly and in any kind of significant way, and not even by next winter. That's a big problem. So I do think oil prices are going to stay elevated. That means the energy stocks should do well. And they've had that little bit of a pullback last week. I think they've got more upside as we go through the rest of this year.
All right, Matt, and before we let you go, what's the scariest part of the market for you right now? Where would you stay away from? What gives you the most kind of trepidation?
Well, I mean, it's the way to stay away from. The thing that really concerns me the most is during this rally in the stock market, credit spreads, although it initially came down a little bit, they within 2 or 3 days, they stabilized. They have not come down anywhere near as much as the stock market has rallied. Therefore, that again, this is another area where the credit markets are telling us that things aren't as good as the stock market is telling us, and that's maybe the biggest concern for me right now.